There is a finite amount of anything physical, gold and silver. So let's take a look at that. Look, there's roughly 190,000 tons of gold. That's that little teeny house that you see, compared to all the gold that has ever been mined and all the gold that's still in the ground. And that's it. That's it. And the same thing with silver, which actually does get used up. And you can see that there's a lot more silver that has been mined than gold, but still there is a finite amount of it. And this is critical for you to see. And so when you have the broadest base of buyer, so lots of entities that want to buy it, but you have a finite amount of it, honestly, is it really any surprise that you see spot gold above 4,600 an ounce at the moment that I did this, and spot silver above $85 an ounce? And that isn't even marginally near its true fundamental value either. You know, I know that you've often heard me say that sound money, physical gold, physical silver, is above all governments and central banks. Well, today I'm going to show you why I say that and truly what that actually means. Because sound money, physical gold, again, physical silver, is universal, decentralized, and when you hold it, it's private. Something that's very important in this day and age where really we have basically no privacy. But you know, gold and silver were the original money, constitutionally supported. Only states, the only money is gold and silver. So this is constitutional money pre-1965. And it had these characters. Money needed to have these characteristics. A unit of account for fair pricing, a medium of exchange for barterability and trading. If I give you this, you'll give me that. A short-term store of value for current fair payments, so you're fairly paid for your labor, and a long-term store of value so that no matter when you use that money, you're always fairly paid for the value of the labor that originally created it.
Money is not defined by law alone. It is defined by function. Throughout history, sound money has consistently fulfilled four essential roles. First, it serves as a unit of account, enabling fair and stable pricing across an economy. Second, it functions as a medium of exchange, allowing trade without dependence on fragile intermediaries. Third, it stores short-term value, ensuring that people are compensated fairly in the present. And finally, it preserves long-term value, so that human effort retains its worth across generations. Gold and silver satisfy all four of these functions naturally. Fiat currencies attempt to replicate these qualities, but without true scarcity, their stability is temporary. History has shown again and again that when money can be created without limit, it ultimately fails, every single time.
We talk about this regularly. So real money, sound money, has these four functions, and every single portfolio needs to have a foundation in sound money. No matter whatever else you do, that is proper diversification. But why is gold and silver above central banks and above governments? Well, because you hear me say this all the time, but I'm going to show you. It's used in every single sector of the global economy. So that's really what puts it above that. It's above all governments, all central banks, because of that supply and demand factor. There is a finite amount of physical gold and silver. There's an infinite amount of money printing. But let me show you the different places that they're used. We don't have to go through each individual one. I just put these into categories, and they're different users for gold on one side and silver on the other. This is for government and financial system. So you can see the gold and silver uses here. Here's industrial and commercial uses. You can see the uses of gold and silver here. I mean, this is a pretty substantial listing, don't you think? This is for consumer and luxury goods.
Gold and silver do not answer to policymakers because they are embedded in the real economy itself. They are used across finance, industry, medicine, electronics, energy systems, jewelry, bullion markets, and emerging technologies. This creates an unmatched foundation of demand, millions of buyers spread across countless sectors. Fiat currencies, by contrast, rely almost entirely on faith in a single issuing authority. When that confidence breaks, demand collapses. History proves this repeatedly. Thousands of currencies have disappeared once trust evaporated. Gold and silver endure because they are valued not only as money, but as indispensable materials. That multi-sector demand elevates them beyond governments, central banks, and political cycles.
Can you see all of the line items and the way that physical gold and silver is used? And are you starting to get a sense for why it's above governments and central bankers, which are all localized? It's also used in bullion and the numismatic, both gold and silver. And then finally, technology and innovation. So if I ran all of those line items down, can you see when I say to you that it has the broadest base of functionality and the broadest base of buyer? Because every single one of those many line items for physical gold and physical silver, that's demand. But things like US dollars or any fiat money, intangible stocks that can only be converted into this garbage, Bitcoin and cryptocurrencies, bonds, all of those things that are dollar or currency denominated. How many places are those things used in? One place. So when that demand dries up, what have you got? You've got over 4,800 fiat currencies that do not exist anymore because the demand went away as the inflation increased. This is not rocket science. It's just simple logic.
Hit subscribe and stay one step ahead.